Welcome to Market News. I am your host. Today is Sunday, July 12th, 2026. Here is what you need to know. Markets closed with a notably mixed read on Friday. The Dow Jones climbed 1.14% to finish at 52,900.07. But the Nasdaq Composite slipped 0.80% to 25,832.67, and the tech-heavy Nasdaq 100 took the hardest hit, falling 1.61% to 29,329.21. Volume told part of the story. The Nasdaq saw 9.5 billion in share volume, and Nvidia alone moved 142 million shares, closing down 1.39% at $194.83. That is not a breakout day, that is a day where traders were cautious on big tech despite a headline environment that is almost entirely consumed by artificial intelligence. But before we get to the AI story, let me lead you with the headline that changed the geopolitical landscape. On Friday, the United States struck Iran in a flare-up over the Strait of Hormuz. AFP reported the strikes as the central event shaping trader sentiment. The immediate reaction was predictable. Oil prices climbed. Dow Jones futures fell into uncertainty. The defensive posture of the market was captured perfectly by a Bloomberg headline that said traders are grappling with a world that is good for the dollar but bad for bonds. And indeed, the US dollar found strength while bonds weakened amid that risk-off sentiment. That dynamic between a stronger dollar and weaker bonds adds another layer of complexity for investors who are already sorting through inflation data, earnings reports, and one of the most aggressively bearish technical environments I have seen in a while. Because the signal engine, scanning over 10,000 symbols across more than 10,000 tickers, reported 34 bearish signals against just 16 bullish ones. That is a 2-to-1 margin against the market. And this is coming at a time when you could not scroll through any financial feed without hitting stories about big tech pouring billions into AI infrastructure. Let us start there. The AI narrative this week reached a fever pitch. Barron's.com ran the headline "Big Tech is pouring billions into AI, and the stock market wants to see the payoff now." That tension is the through line for the entire day. Microsoft, Google, Meta, Amazon, and Salesforce are all putting down massive stakes. Salesforce announced a $1 billion AI commitment in Switzerland. That is a single company, a single announcement, $1 billion. And then you have the broader picture. Amazon itself was in the news with a $25 billion development story that raised questions about whether the market can absorb that kind of capital allocation and still reward shareholders. JP Morgan called Amazon, Nvidia, and others central to the AI infrastructure build-out. But Nvidia, the market's AI bellwether, closed down 1.39% on massive volume. That is the kind of signal the market does not love. You want your benchmark to be leading higher when the headline narrative is this bullish, and it was not. Meta added to the complexity. The company faced a $2 billion AI deal reversal reported by Simply Wall Street on top of an EU app design probe. That is a lot of regulatory and execution headwinds for a company that has staked so much of its future on the space. OpenAI added its own drama. Fidji Simo, the application's chief, stepped down from her full-time role over chronic illness, saying she failed to make this decision many times before. And then the legal spat between Apple and OpenAI over alleged trade secret theft continued to escalate, with an ex-Apple engineer now at OpenAI at the center. Elon Musk weighed in to roar at OpenAI's position, and Sam Altman pushed back with a quote about Musk selling investors on space data centers. So the AI industry is generating both capital intensity and legal, regulatory, and personnel turbulence all at once. Wall Street's response has been to demand proof of returns. Barron's made that explicit. Oilprice.com published a piece asking directly if the AI bubble is about to burst. When a source like Oilprice.com is running that headline, it signals that the skepticism is no longer confined to contrarian corners of finance. It is in the mainstream. Now, the other major macro story on the books is the big bank Q2 earnings kickoff. JP Morgan, Bank of America, Wells Fargo, and Goldman Sachs all reported. That gave traders early signals on the health of the financial sector at a time when June CPI data is also out, offering additional inflation insights. So you have financial sector results, inflation prints, and geopolitical risk all converging on the same week. That is a lot for traders to digest and price in. Let me shift to the corporate action stories that stand out. Procter & Gamble announced 7,000 job cuts aimed at offsetting tariff costs. That is significant headcount reduction from a consumer staples giant, and it ties the trade policy conversation directly into earnings and operational planning. Jeff Bezos' Blue Origin raised $10 billion at a $130 billion valuation. That is a space company, not a tech company in the traditional sense, but the capital markets are clearly willing to back ambitious private space ventures with this kind of money. And then there was the story that JP Morgan called a potential SpaceX-Tesla merger strategically coherent. Whether that merger materializes or not, the fact that a major bank framed it that way sent traders scrambling. A top analyst then pushed back, saying a Tesla SpaceX merger would not save investors. So the debate is live. On the cryptocurrency side, there were pieces asking whether Bitcoin is undervalued, with value investor Bill Miller Roman IV weighing in. Another piece asked if Solana summer is finally here, linking SOLUSD momentum back to Nvidia and the broader AI narrative. That cross-asset story between crypto and semiconductors is an unusual but interesting dynamic to track. Walmart was reported to have quietly found a way to undercut Costco on gas pricing, and Dollar Tree made a key move to keep popular items in stock. Those are smaller names, but they reflect the same broader themes: competitive pressure on retailers and the ongoing fight to manage consumer-facing costs in an inflationary environment. Let me circle back to the technical signal environment for a moment, because it deserves emphasis. 34 bearish signals, 16 bullish, out of more than 10,000 checked tickers. The top bullish reads were all small names: GDC, PAVS, ALIT, NEW, QNCX, all flagged for strong momentum up with a score of 1. On the bearish side, the top reads were BFLX, Cello, KTTA, PU and RNWWW called overbought or overextended. When the technicals are this skewed, you expect selective participation rather than broad market strength. And the biggest movers certainly reflected that. BCPC, a name that barely registers in most portfolios, surged an extraordinary 598.1% to $168.80 on nearly 200,000 shares traded. CLRO more than doubled the day at 101.24%, with nearly 89 million shares changing hands. CWD jumped 90.61% to $1.23 on 338 million in volume. Those are not moves you see in large-cap names. They are moves you see in illiquid, speculative names, and they tell a story of capital flowing into higher-risk, higher-reward plays while the broader indices sit in the weeds. On the flip side, TC plunged almost 39%, LTX fell 37.4%, LI dropped 35.8%, and several others fell 25% or more. The dispersion between the big gainers and big losers is extreme. So the big picture takeaway for the week ahead is straightforward but layered. The geopolitical headline risk is real. U.S. strikes on Iran, the Strait of Hormuz flashpoint, oil prices rising, the dollar strengthening while bonds weaken. That is a triad of macro pressures that do not make for easy trading conditions. The AI narrative is at peak intensity, but the market is pushing back, demanding evidence of returns from tens of billions in capital expenditures. Nvidia closing in the red on huge volume is not a comforting signal for those betting on the AI trade. The signal engine is heavily skewed bearish. Big bank earnings, June CPI, and corporate restructuring like Procter & Gamble's 7,000 job cuts add further complexity to an already crowded event calendar. What I would tell you to watch in the next few days is whether the geopolitical tension escalates further and whether oil continues to climb, which would complicate the inflation picture even more. On the AI side, the momentum in the headlines could either be validated by earnings or deepen into a credibility crisis if the numbers do not match the narrative. And technically, with a 34-16 bearish to bullish signal ratio, you are in an environment discipline matters more than ever. That is everything for today. Thank you for listening to Market News. We will see you tomorrow.